Good morning, Saturday morning, 8:28 a.m. Pacific Standard Time, 4/28/2012. Yes, it's true. We had that big correction that we called for right up here at that 2800. Yes, it's true that it's a daily chart. Yes, we said that we were going down, and we did. Apple Computer came out with the earnings. Yes, it's the Nasdaq 100. Yes, the gap, just like when I pull up a daily chart, which I will right now on Apple. And I want you to see the correlation because it's going to be the same thing. Here we go. And I'm going to right click here and I'm going to zoom in and I'm going to show you the gap. And I'm going to show you that this is Nasdaq 100 and this is Apple Computer. And when Apple Computer, and I'm going to show you that this Nasdaq 100, what makes this a great trade is you can see straight down on Apple Computer, and you can see Nasdaq 100. It's one stock only called Apple Computer that makes this Nasdaq move up and down. It's not the broader 100 stocks. No, it's one. That's the gimmick phase. Now, having said that, what we're going to be doing is looking carefully that this had started its reversal, gap reversal. This one here was a very narrow range. We're going to be looking at taking this Nasdaq 100 down using put options because it was your first calendar bull year reversal, bull trend reversal. And that's the counter trend. So the market had been waiting for a pullback for money to come off of that sideline, and they finally got it. And then the gap started it, so it's called what we call a counter trend, right to the resistance level. The neckline is 2800 on that Nasdaq comp, and we're going to be doing it very carefully from a daily perspective. From a weekly perspective on this Nasdaq 100, we're right up above the 10-week moving average, which is at 2696, and we're closing on the Nasdaq 100 at 2741. So when buying puts on Nasdaq 100, you have to really be able to gauge this Apple Computer trade. Now, seasonality wise, going into the summer period, the heavy tech related, which moves this Nasdaq 100, does not do well in the month of June and July. That's a forgiven. Semiconductors are soft. Earnings contraction is there. The GDP that people were looking for at 3% never came in on Friday because it didn't. But the market didn't care because they had that one stock working for them. So it's like, okay, when that one stock does come down again, this Apple Computer, then this broader Nasdaq 100, and not only does it take the Nasdaq 100 down, it will also take down the Nasdaq comp during the summer period. And we will not be wrong on it because we are good enough to talk about this and do the analysis with our MMTs and our world traders around the world before it ever happens. Just like we told you that we were going to get the reversal up here, and we did. And you finally got the Nasdaq comp above that 3,000. Look at this particular 10-week moving average will be the primary key focus. Why is that? Because now, unlike anything else, the 10-week is at 30.30. And so once this counter trend, it's a weekly counter trend, all based on Apple earnings last week. And that's what got that Nasdaq comp moving again. And every bull rally has to have shakeouts. The price volatility that I talked about, that would be the first trading day of April, has lived up to its name. And that's why the markets are much better than this kind of crap here. And no one has seen this kind of stuff happening since, you have to go back to 1999 for probably the most people in this group and people viewing the video, is that this was a one-trick pony, straight up. And what happened here in all indexes within this bull rallies, all the shorts in 2011 got taken out. Once they got taken out and Apple shorts were out and everyone was out of the way, you had your correction. So all eyes on Nasdaq comp, all eyes on the Nasdaq 100 relative to the weekly moving averages. I will tell you that the summer period, what led these markets higher And let us not forget the financials never played a role in anything last week, because they didn't. And we're going to have the big monthly unemployment report. We're going to have the ISM coming out, manufacturing index, and by looking at where that GDP number came in, that everyone had at 3%, that's lower. That tells me that next week that the shorts are going to be coming out on top of the market. And every counter trend, see, it's not the broader stocks. It's one stock causing this whole thing. And it's because what the exchange model did is they put 16 to 20% relationship with Apple into the Nasdaq comp, and that's Nasdaq 100. This is Nasdaq 100. So what I will say over the summertime, parts of the summer, not all of the summer, is that from the original 3-week reversal, most of the earnings are out of the way. A lot of the economic indicators that are coming in from last week did not show up. Not to mention the Spain deal and the downgrades. Some equities had a wonderful correction that were buyable, because in bull rallies, the people that were not involved all year and watched it go to the top came in and started buying the dip. I will tell people I'm going to conclude the Nasdaq 100 and the Nasdaq comp and what's behind it. And part of our segment that we're going to be doing is looking at Nasdaq 100 call and put strategies. And that I can tell everyone that we're not nearly as overbought as we were. Because when we were up here, we were at 96.8% overbought. Give me a break. 97 was the freaking peak, and it stayed up there. 1, 2 at peak, 2 weeks, 3 weeks, 4 weeks, 5 weeks. And mechanically, intrinsically, it's not possible. Because exchanges are going to have more volatility throughout the summer period, both for the long side, but particularly also for the short side. Because exchanges cannot just have things go straight up and I'm just going to keep going. That's all a bull ever thinks. You got to know when to be a profit taker and how to adjust your life with the marketplace. Nasdaq 100 and Nasdaq Composite. Nasdaq Composite, once again, Nasdaq 100, 10-week moving averages. Yes, it's above the 10-week. That's more of a bull case than a bear case. However, once the earnings play themselves out next week, and with all that new economic data and going into a weaker seasonality